Welcome to Beat the Market. Tonight we're just gonna go through a few things about gold and the head and shoulders pattern it's signaling, and the basically imminent sell-off. There's a wedge pattern that it's showing in the weekly chart, and we'll get to that. So yeah, just let's see. So the chart's right here, right? So you see the head and shoulders pattern? You know, it's a little sloppy. And first thought the shoulder was right here. But things can work out, and just as long as the neckline stays intact. What's the neckline, you ask? Here, I'll show you. That's the neckline right here. So it's basically right between the neck, right? And your shoulder. So that's the bottom, and there's the other one. So just as long as, so we'll say, we'll get the neckline, say about 250. If it breaks below that, then we're gonna say, yeah, this pattern's toast. So you got your left shoulder, your head, which is your top, and your right shoulder. And the one thing that you should see is you kind of have a turn in momentum here. It's tried to get positive, but it looks like it's going back down. And corresponding with that is a failed attempt to hold the 50-day moving average, which is never a good sign. So let's yeah, look at this a little bit more. So how do we know? Well, you know, for some reason mid-October it got to a bottom and it just couldn't hold it. So it had this and bounced off the neckline pretty good here. Broke up, and we had some rumors here that QA is being delayed. Well, it is being delayed, but till March. So woohoo! You get a month or two, maybe 3 months of relief from tapering. In the big scheme of things, is that a big deal? No, not at all. So that's something you really got to be aware of here. So where's our first initial target? Well, since you got a trend line right here, and they break, one thing that you should know is that they rarely like to break back down through these trend lines. It's just symmetry, something to do with symmetry. I don't know. Sometimes they do. You know what? If the market's completely wrong or there's a huge material, things can happen, right? But what I expect to see off this head and shoulders pattern, especially after this little trend line break, is to see this kind of bounce back down along here. So you might see 1250 in December, you might see 1200 in January, and then, you know, you get these little bump spikes up. So this line ends up going down to oblivion that you'll never really attain in the long run, because it goes down through zero. But just as long as it weeds out towards there, eventually, you know, this can basically bounce along the bottom all the way along this line here. It's done it before. Here, I'll show you. Here's one where it did it. This trend line. It's not kind of messy, I guess. Let's see how it broke. And what's it done? Bounce back down. Great. Awesome. So there's your head and shoulders pattern. So where's the break come here? Well, let's go to the weekly. Right here. You can see the triangle breaking. Let's bring it a little bit more. Whatever, it's not going to be longer. And we can draw our lines. Here's the initial breakdown in the gold market right there. Happened back in February, which yours truly called. and then you have a complete breakdown. You have a death cross here. You know, that's definitely signaling the end of the friggin' 13-year run in gold. And you have an accelerated trend line. You know, what do I mean by accelerated trend line? Exactly what I mean. This trend line is steep. It started off because there wasn't so many believers. But when this trend line breaks, oh, you got a lot of people. Like, wow. Boom! So now you got this established trend line on the weekly. So really, on the daily, you haven't even seen anything, right? You had a tiny little break. What I was showing you is kind of this trend line here that I kind of went above. So, see how this can really go down in the long run? Yeah. Anyway, just show you that. So that's just a projected line. Anyways. So let's show you this established tiny little bottom. Take you to a second little bottom. And there you go. Got a triangle. Ignore that little line. Actually, we should just take that little. And you see, you got a month to make your bet. Chances are you're never going to see 1350 again. Maybe you will, but I doubt it. You are never going to see 1350 again. There's some other signals, some daily signals, trading patterns. The fact that it went up through 1340 and came back down through 1340, 1330, this area. It's a big band of resistance support, and there's no momentum. And if it comes back down to here, like this was a huge area on the way up, and it's just no way. It's not holding it, which is scary, really, because what it means is, you know, there's no bid in this market, really. Every time, the only time there's a bid, you see the traders come in, they see the bottom lot is too much. Come on, right? They use their parabolic band. They're like, okay, we can buy this law of averages math. We can buy this, make some money. It comes up every time you see this trend line. Boom, boom, again, boom. This is scary stuff if you're a gold buyer. Like, no inflation in the market. You know, QE. What's happening to QE? I'll tell you what's happening to QE. Nothing. Because it's not getting into the market. The banks aren't lending. All QE really was to satisfy the Basel rules. You know, so all they did was print money, buy bonds, stuff it on the bank's balance sheets. Is really what they've done with it. So the banks aren't spending, right? You know, that money doesn't get to Main Street really at all. It just sits there on the banks. You know, supporting, I guess, confidence, supporting risks, making sure the banks don't go bankrupt. But, you know, how can inflation happen in that environment? You can print all the money in the world, right? It's like Monopoly, right? There's all that money in the game, but it's just there, sitting there in the bank, and no one's spending it. So there's no demand, no extra demand. You know, everything, nothing affects the supply-demand equation, and that's what affects inflation in the long term, right? So, you know, what they've done, it's smart math. And it's not the Weimar Republic. Definitely not. So, yeah, that's my little thing for tonight. More to come.